question over here is that if you're a long-term investor, would it be advisable to maintain a higher number of blue chip stocks in your portfolio? If I can ask, Madam, what do you mean by a higher number? How much are we talking about? How many? More than 20. Obviously, diversification is a strategy that is going to work always. And you're going to make money, especially if it's an uptrending environment, because all issues tend to make money in uptrends. But for me, especially when you're at a point where you are consistently cutting losses, keeping your losses small, then I would suggest to keep those issues 10 issues max. Because for me, number one, it's very important to be focused, especially when you're staying on top of trading plans. Typically, when I have more than 20 issues spread across all my clients, I have a very hard time staying on top of each of the trading plans. Because as maybe some of the traders know, when prices are breaking out, you're seeing a lot of stocks breaking out across the board. When stocks are breaking down, there are a lot of times when you're going to see breakdowns happening at the same time, and you need to be executing at the same time. So for me, focus is a very important principle that I always follow, not just in trading but in life. But I want to be as focused as possible, especially when I hit a winner. That winner can essentially generate returns for me that can eventually outperform the index, help my portfolio outperform the index. So I'd say if you're long-term, are you a long-term person who's cutting losses, or are you a long-term person who's not cutting losses? That's the question. Because let me tell you something. If you're a long-term person that's doing peso cost averaging, meaning EIP, Easy Investment Program, or SAM, Strategic Average Method, then obviously this is something that you shouldn't be mixing with your EIP. Guys, very important. If you're already doing EIP, huwag niyong ihalo yung natutunan nyo dito sa EIP. Kasi ang EIP, ibang laro yan. Right? And when it comes to EIP, I can understand if you're holding on to 20 issues, hinuhulugan mo yan below the buy below price. That is perfectly okay, right? But I would suggest that if you're doing even a long-term portfolio, but it's a long-term trading, which means it's a long-term technical portfolio where you're allocating that long-term fund into uptrends and cutting issues that are not panning out, then you still need to keep a maximum of 10. Next money management habit is, for me, I never average down. Averaging down on a position is simply sending neutral money or good money after bad money. Nagpadala ka na nga ng pera, naipit na nga, pinadalahan mo pa ng more money, diba? Which doesn't, from a technical point of view, doesn't make sense. Because if you're adding on to a losing position, not only are you adding neutral money over to bad money, it also means you're not cutting your first position in the first place, right? So for me, especially when you're implementing technical analysis, at the beginning of let's say at the beginning of your entry, I would maybe exempt this. An exception to this would maybe if you're tranching an entry into a position. Maybe you're buying 10% of your portfolio, let's say, into Wilcon. And then instead of buying the full 10%, you buy 5%, and then 2.5%, and then 2.5%. Then that is something where I could accept averaging down, because that's tranching. But to be able to buy 10%, and then for you to be able to recoup those losses, you double down on the position in the hopes of recovering, or you double down because huy, mas mura. Diba? But remember, cheap can always become cheaper. Cheaper can always become even cheaper, right? So when you're doing technical analysis, it's never recommended to average down. Never send good money after bad. And lastly, the best practice is to average up as a conservative approach. But average up not more than your allocated position. So there was a question asked me during the break earlier, how do you average up effectively? For me, it's simple. You average up in a way where your resulting average price will never be lower than your trail stop. Let's say you have an existing 10% position. You want to build it up to 20%. But if you add 10% more, it means that your average price, your resulting average price, will be higher than your trail stop. Then it's not something that I would do. I always try to keep my average price lower than my trail stop. So at least I'm not prematurely taken out of my position. Bakit walang automatic stop loss sa COL? So that's something you'll notice not just with COL but with other brokerage houses as well. Is that correct? I asked the same question 3, 4, 5 years ago to the guy that originally gave this seminar. He still gives this seminar. And he told me that it's a matter of the Philippine Stock Exchange approving the automation of selling stops and buying stops. But in terms of COL, according to him, it's as simple as a flick of a switch on and off to have it available for COL customers. It's just a matter of the regulator allowing it for brokers. So now we have a trade plan. So the last point in a trade plan is to be able to measure your trades. Very important, especially if you're trying to improve in something. Best management guru of all time, Peter Drucker, said that you can't improve in something that you can't measure. How can you improve in something if it's not something that you measure? So typically, after trading, the best practice is if you had any trades for the day, like the past 2-3 days, wala akong trades. But if you look at the trades for today, you list down the stock. The important ones are obviously when you bought it, when you sold it, how many days did you hold it, net gain loss, hit ratio, your running hit ratio so far, meaning how your batting average, your average win so far, your average loss, and obviously your edge ratio, which is at the end. Your edge ratio is simply your average win over your average loss. It simply tells you, on an average, how much money do you make when you win, and how much money do you lose when you lose money. So typically, and you might want to write this down, if you have a batting average of 30%, meaning 3 out of 10, the minimum edge ratio that you need to meet to hit break even is 2.4, which means that for every loss that you take, your every loss in 30% batting average, in the 30% that you make money, it should be at least 2.4 times the 7 times where you're losing money on an average, to be able to make sure that you're staying on the break-even side. Hit ratio is you get your total, let's say for example, over 10 trades. Out of 10 trades, 5 yung kumita, 5 yung nalugi. So ang hit ratio mo is, meaning your wins over your total trades, total wins is 5, total trades is 10, so your hit ratio is 50%. So parang field goal percentage yan. Diba?